Good afternoon, everyone. My name is Timothy Lee, and I'm a mining analyst here at Red Cloud Securities. We welcome Mark Selby, Chairman and CEO of Canada Nickel. He will speak to us about Canada Nickel's large and growing Crawford Nickel project, as well as other exploration targets near Timmins, Ontario. Mark, you will have 15 minutes, and then we'll have a 5-minute Q&A at the end of the session. And attendees, please feel free to ask questions using the Q&A link below. Take it away, Mark.
All right, thanks, Tim. Thanks for the introduction, and thanks for Red Cloud for the opportunity to present. And Red Cloud has been a great supporter all the way from the very, very early days of the project. Let me just click ahead here. Oops. There we go. Yes, so thanks for everyone to listening to today's presentation. Over the past 2 years, we've taken Crawford from being a great new large nickel sulphide discovery to demonstrating that is clearly one of the leading nickel sulphide projects globally, with the results of our PEA at the end of May, where we proved up a $1.2 billion NPV on a resource that we locked in nearly 8 months ago, and we're continuing to expand what we have at Crawford. What I'm most excited about, in addition now to rolling right into a feasibility study, which we expect to deliver next year with the goal of getting this project into production by the middle part of this decade, is now we're really starting to step out and test the district scale potential of what we have here. We really believe that we've got the potential for multiple Crawfords within this land package. Not only is it a great resource, but it's in a great location with great community support. We've got excellent relationships with the local First Nations group, and in terms of the critical supplier to the EV sector, we've been way out in front in terms of promoting the nickel and cobalt that comes from these types of deposit as a net zero carbon project. And again, given where we are just outside of Timmins with all the hydroelectric power from the grid, we truly believe that we'll be able to get to a net zero nickel cobalt product and a net zero iron chrome product. As I said, our PEA came out at the end of the last month, and we're very happy with a multi-decade base metal operation of the kind of scale that we're talking about here, with very, very robust results. We will be putting our feasibility study out by the middle part by this time next year. And again, the reason we're so aggressive in terms of advancing this project, one, our team took the Dumont Nickel project from resource stage to fully permitted. And these projects, our project at Crawford shares a lot of similarities between the two. But then, the other big reason is the market-wise. If you've seen what's happened to nickel demand over the first 6 months of this year, in terms of nearly 20% plus growth in the stainless side, demand from the EV sector up over 100% year over year. We really believe we're heading into one of these nickel super cycles that happens every few decades. And again, we're one of the, believe the leading nickel sulphide investment in the space today. As I said, the team that we put together has a broad range of skill sets, and again, a number of key members came from my team at RNC, where we took Dumont through to a fully permitted construction-ready project, and we're ready to do the same thing here with Crawford. I won't talk much about the nickel market right now, given the relatively short span of time, but I think, just again, really want to emphasize some of the key advantages of Crawford versus the industry as a whole. First off is the carbon footprint. We started talking about this over a year ago. And again, Elon Musk made it very clear, they're looking for cleaner nickel, and, more than 100% of the supply from Indonesia, more than 100% of the supply growth in nickel has come from Indonesia. And that all comes attached with a very large carbon footprint. Again, the shift to matte production from NPI is great for nickel supply and for EVs in general, and something that we'd seen coming 4 years ago. But again, all that matte also comes with a very similarly high carbon footprint. And so, sulfides are inherently lower carbon, and I'll show you where we sit on that curve going forward. The other thing, again, that I think is something you'll see get a lot more attention over the coming year, just the concentration of supply. The oil industry at its peak, when OPEC was at its peak in the early 1970s, OPEC controlled just over half the supply. And nickel is just 3 countries that control more than half of supply. And by the middle part of this decade, they'll be approaching 65% of supply. And these are 3 countries, and again, you can throw in Russia into the mix there, that face revenue shortfalls, have no issues intervening in the mining sector. So again, I think you'll see some sort of special taxes put on place sometime by the middle part of this decade, which again will make other assets outside those countries that much more relatively valuable. In terms of location, the scale of the deposit, we've been able to clearly demonstrate through the resource, but I think one of the other major strengths of the project is its location. Just outside Timmins, we're literally next to and underneath the highway. We have all the major infrastructure you'd need to build a project in place. You've got 4 of the 6 largest Canadian gold and base metal projects permitted in the last 15 years within 2 hours of Timmins, which underscores, just how great a locality it is to advance this type of large-scale project. And then again, with the Kidmet site down to the south, with the option for a lower cost starter option, utilizing some of the surplus capacity that exists at the Kid Mill today. Our PEA, which came out about 6 weeks ago now, we filed our technical report on this past Friday. So, $1.2 billion NAV, 16% after-tax IRR. Again, having been worked in large-scale and mid-tier mining companies, these are the kind of returns you see for large-scale, multi-decade projects. At our peak, we'll be producing 42,000 tons of nickel a year. Over the life of the mine, nearly 2 billion pounds of nickel, and in our iron concentrate, 20 million tons of iron and 1.5 million tons of chrome, and that's for 25-year mine life. One thing I'm going to emphasize, and I'll come back to it in a slide later on, this was based on a resource that was only 13 months of drilling. Last October, we locked the resource in for the PEA at that point in time. That was on hole 65. Today, we're on hole 140, and we expect to have a 50 to 100% larger resource available for the feasibility study, which will lock in sometime early next year. And again, that'll give us a lot more higher value, lower cost tons to be able to pull into the mine plan earlier on. Because of the low-cost nature of the operation as a whole, and then the large iron chrome byproduct, very well positioned in terms of costs and in terms of cash flows, which you can see there. One of the things with these projects is, with the biggest difference between advancing Crawford today and advancing Dumont during the past decade, is the 180-degree shift in the mining industry's outlook on nickel. Last decade, very few large mining companies were interested in nickel. Today, you've got BHP Billiton opening up an exploration office, nickel exploration office in Toronto. And I can assure you that a lot of the other large mining companies are very keenly looking at nickel opportunities. And the reality is they're going to need to look at scale operations that can move the needle for their businesses. So, the fact that if we were in production today, we would be the 5th largest nickel sulphide operation globally. We would be the largest base metal operation in Canada, larger than Highland Valley's operation run by Teck, larger than Raglan with Glencore and Voisey's Bay today. That's the kind of scale operation we're looking at here with Crawford. Again, very well positioned on the cost curve with the other operations that have substantial byproduct credits. And again, in a position that the majors are looking for, and then in a kind of chart that is probably going to be one of the most important charts in terms of ranking projects going forward, is where we sit on the carbon curve. Scar & Associates, who does a lot of the work for BHP in their presentations, you can see, we are in the top percentile of the carbon curve. And that's before you factor in the fact that the waste rock and tailings that we generate wants to spontaneously absorb CO2. So we think we'll have a very, very low carbon footprint operation and be a net zero supplier of material to the EV sector. Again, it's just in terms of our ability to deliver net zero, it's a function of the rock and tailings ability to absorb CO2. It's a function of all the electricity in the region being zero carbon, and then the potential for us to co-locate our downstream operation and look at scrubbing the CO2 that gets generated from the downstream process. That really underscores that approach. In terms of the phasing, it basically started a single SAG mill, ball mill. We twin that about 4 years out, and then we twin it again another 4 years out. Twin it again. We add some additional crushing and some additional flotation capacity to get up to 120,000 tons a day. The only base metal operation that would be larger scale than us then would be Highland Valley. So again, just giving you kind of the scale of operation that we're looking at producing here today. We are looking at processing the material right now. The PEA is predicated on taking all of our concentrates and converting them into stainless steel. Everyone's focused on EVs and sulfate, but the highest margin products in the market today for nickel and products that are much easier to make than sulfate is just 304 stainless steel. For our feasibility study, we will look at having a path to the EV market, where probably half of our nickel will go to that chain and half will go to the stainless steel chain. And again, the reason we didn't do it now is we don't have a demonstrated path to do that. Some people are putting numbers in their reports, but again, the only hydromet refinery that a miner has built is Voisey's Bay, and it cost $4 billion. So that's nowhere where we want to go. Where we think the market is going to go is what you see with Blackstone Minerals and their joint venture with EcoPro, who's a Korean battery precursor maker, where they're looking at taking concentrate into one end of a facility and producing battery precursor material out of the other end in the same facility. That's what we expect to see, get developed, and we'll be looking for something like that to be in place for our Timmins project. In terms of our concentrates, sorry, our high grade concentrate will be the highest grade concentrate in the world. And again, it's just a function of the mineralogy, and our standard grade would be in line with what you see at a typical nickel producer. Again, really want to emphasize that there's a huge amount of upside from our PEA to our feasibility study. 50 to 100% more resource. Most of the large low grade deposits have been around for a few decades. So we have significant opportunity to continue to improve our nickel, iron, and chrome recoveries. Having a net zero carbon footprint will have real value, and we'll be able to quantify that by the FS. Any nickel that we deliver into the EV market will also allow us to get paid for the cobalt PGMs contained in there. And then we taking advantage of the agreements that we have with our local First Nations groups to look at a better fleet financing costs, which will have a real benefit, and then the lower cost, lower risk startup option with Kid Creek. As I said, we permitted Dumont with broad community support and very strong First Nation support, and we intend to repeat that here with Crawford. And as you can see from the comments here, we're off to a very, very good start. The Glencore Kid Creek mill option is really about a lower cost startup closer to $100 million that will allow us to de-risk the flow sheet before we then have to spend $1 billion to build the big project. So again, it's nice to have that opportunity, and again, being in an area with lots of infrastructure provides these opportunities. The last piece and a big chunk of the news flow over the coming year, in addition to the feasibility study de-risking, is really going to be around stepping out and the district scale potential. So Crawford's already one of the largest nickel sulfide discoveries. This is from a Vale presentation in 2015. The reason we're very confident that we think we're going to find more of these deposits, if you look at anything in here that's bright pink, that's potentially a nickel-bearing ultramafic. That little brown peanut there is what 900 million tons of resource looks like. If you look in Western Australia, the three biggest sulfide resources are all within 50 miles of each other. And after BHP bought the only one it didn't own last year, they're now all owned by BHP. You see it in Minnesota, you see it in northern Manitoba, and you see it in other locations worldwide. So, we believe, that we're going to be able to find another two or three. We've released results from McDermott. Our first 3 holes there hit mineralized dunite. So we were quite happy with that. And we're even more excited about the announcement last week with the nickel discovery at Nesbitt, where again, we hit, wide zones of dunite on a target that's 3 kilometers long. You can see from the inset pictures there, there are visible sulfides there that we think will deliver grades comparable to what we have the higher grade zone at Crawford. And it's only 8 kilometers away from Crawford. So this could be a whole new source of feed into the mill. We've done very, very well since we went public about 16 months ago, and we're going to continue to move further. Again, this is the size of the prize. We've had this in our presentation since day one, because, again, nickel sulfides trade out at premium valuations. Nova Bollinger got acquired at a feasibility study stage, which is where we'll be by this time next year. We already have in our mine plan more than twice the recoverable nickel than Sirius had. So again, I think valuation wise, there's no reason we shouldn't be able to achieve those kinds of levels. With the capital raise we did this week, We're in great shape financially. That'll take us well through the end of this year, and we'll look to raise another $10 to $15 million later this year from either the strategic investors we're in discussions with, or we'll look to do a broader equity raise later in this year if the terms just aren't right from the strategic investors. So again, to summarize, again, thank you for taking the time to hear this story. It's a new sulfide discovery. With our PEA, we demonstrated it's a leading nickel project. We're in a great location where you can actually permit and build a mine. We can deliver net zero nickel, cobalt, and net zero iron to the market. And again, we think we're going to be very, very well timed for what's going to be a very robust nickel market through the middle part of this decade. And with that, I'll be glad to answer any questions that you might have.
Great, thank you very much, Mark, for the excellent presentation. Just a reminder to listeners, you can submit questions at any time. We do have a few questions already. First for you, Mark, is CNC still on track? You had referred to the Kidd Creek facility. Is CNC still on track to begin early production using existing facilities while waiting for CapEx to build permanent facilities? Though it seems like the PEA was based more on complete standalone facilities.
Yeah, so no, and we highlighted in the PEA that we completed the capital and operating cost work to understand what it would cost to renovate the mill, because again, even as you know, in your own home, sometimes it's more expensive to renovate than to build new. The good news is the numbers came in where we wanted to, and so now between now and the end of the year, we want to complete the negotiations with Glencore about what that option could look like. So we'll see how we go. There's a lot of synergies in both directions, so I think we'll be in a position to get there. But again, everything's going to be prefaced on the feasibility study and then ultimately permitting. And again, the smaller scale permitting, one of the benefits of the small scale startup is faster permitting, but we've got quite a while to get those discussions finalized, and we'll be doing that over the course of the rest of the year.
Great. One question here about looking downstream, and you had referenced the agreement that Blackstone had, but is CNC actively targeting Tesla or any other EV companies for contracts?
Yeah, so in my past life with RNC with Dumont, Dumont was one of the only large scale feasibility study stage nickel operations available. And so, we were in discussions at that time with a number of EV supply chains. Part of the reason I was keen to get the PEA done as quickly as possible is, again, those companies are used to dealing with either big mining companies or, ready to go projects. And so, at an exploration stage, it's pretty early to have those discussions. But, again, I know a lot of the key players and the EV supply chain, and we'll be picking up those discussions now that we have a PEA in hand that we can talk about what actual volumes and timing would look like. So I'm looking forward to ramping those up through the course of this year.
Great. And one kind of general question here, but obviously you're looking at the clean energy and talking about clean extraction here, but could CNC become the largest source of clean nickel in the world?
Yes, I think we could, because the people ahead of us on the chart, have either issues where they have to rely, they're in a remote location and have to rely on thermal generated electricity, or they've just got part of their supply, part of their production process that does generate some carbon. So yeah, no. Again, I think, again, particularly if the district scale that we think we have, comes to pass, and we'll be proving that out as the year goes. Yeah, no, I think, my belief here is, if you look back in nickel's history, we had a first wave that produced lots of nickel from a half a dozen large sulfide deposits, including Sudbury, but that came with millions of tons of SO2. That then got superseded by nickel pig iron production, which, provided all the incremental supply the world needed, but at a cost of millions of tons of CO2. I think these large low-grade sulfide deposits like our project, and I think we're hopefully leading the pack here, to being a new generation of nickel that for the first time in the history of this metal doesn't come with a massive airborne emission penalty attached to it. So again, I think it's going to be a very, very attractive source of nickel for a lot of consumers going forward.
Great. Well, unless there are any other questions, we're just about out of time here. But I want to thank Mark Selby very much for presenting today, and thank you everyone out there for listening in and for your participation.